Welcome, everybody, to another episode of the Good Deeds Note Investing Podcast. I am your co-host, Chris Seveney, flying solo today while Jamie Bateman heads up to, I think he's in the Hamptons or somewhere very ritzy up in the Northeast. But I've got a special guest today, somebody I've known for, a few years, actually a few decades, Mr. Jeff Laroche. Hey, Jeff, how are you doing today?
Good. Thanks for having me. Do I have to call you Chris or?
You can call me whatever you want. So, yeah, Jeff and I, full disclosure, go way back. We went to college together back in the mid '90s. But during COVID, Jeff and I kind of got back together a little bit with another group of guys and so forth and so on, and asked kind of what we were doing with investing. And Jeff was doing some other alternative investments and knew I was kind of in the note space and got intrigued by it. And now I think he's an addict like many of our listeners. So Jeff, why don't you tell people a little bit about yourself and kind of how you did stumble upon note investing?
Yeah. So I'm an engineer. I'm a program manager, right? Program capture manager in the defense space. My background's chemical engineering. I work primarily in microelectronics R&D. Basically we had that discussion one night. We were just kind of hanging out online, killing time. It's probably the most charitable way to put it, right? So we were hanging out and we got into the discussion and, kind of like about life in general. And I think it's just kind of, we have some similar life experiences, right? And you just think about the future and the rat race and getting out of the rat race. And, the more you talked about notes, the more interesting it was. And, I have to admit though, from a financial perspective, it was very interesting. But initially I thought it's like, well, I don't know if I can handle looking just at spreadsheets and it's going to be really dry going over documents. And my perception about that was completely wrong, which is refreshing, and it's made it really interesting. So,
from your background, you have some real estate background. You have a rental or two from some of your travels or relocations, correct?
Right. We had a 3-family apartment building in Massachusetts. And then we relocated to Austin, Texas for several years for work. And the real estate environment is much different down there. It's more of a single family type environment. But through that, we learned to do a 1031 exchange. We 1031 exchange it. We had an LLC. So we kind of went through the ropes there. And, I like physical real estate as well. But, you have the tenant issues you have to deal with. And I guess it's kind of a whole interesting additional discussion we could have, about, what type of neighborhood you want to have your rental in, the return on that versus being in a neighborhood where it's just fire and forget and your tenants never cause any issues, right?
Yeah, that could be a whole nother discussion, because you'll see a lot of people, I know you're on Bigger Pockets as well, buying in these C neighborhoods and looking for cash flow and so forth. But, I've always lived in, I'll say areas where it really didn't make sense from a cash flow perspective to have rentals, because I was in Massachusetts and then now down in the DC area. But you buy them and you're buying them for appreciation. And yes, the market, at times goes down and so forth, but long-term gain, I found that I see more people building wealth off of that case study versus the, buying a C-class asset that is providing cash flow, because the one moment you get somebody stop paying or you got to put a new roof and so forth, you'll lose a lot of your cash flow.
Right. And it's just, it's just the mental, emotional part of it, right? Like we had one tenant, she was great, but my wife she'd pay, but $50 short every month. And then she'd have to pay, come back and be like, okay, do you have it now? But yet she had a summer car and a winter car, right? And her furniture was better than ours. So it's just stuff like that drives you crazy. And then when we moved to Austin, it, like you said, it's much more of an appreciation area, low cash flow, but we've never had an issue with our tenants. It's just on autopilot, right? And I know I've just ruined it just by verbalizing that. It's going to explode in my face now, but,
But then you get into the note investing space where you go to have somebody drive by to take some photos and they haven't paid in 3 years, but they got a brand new Lexus in the driveway.
Well, that's really fascinating. That's the thing that really struck me, because initially it was just kind of and I'm still learning sometimes the hard way in a lot of things, but looking through the documents and chaining them together. But then once you get past that and you start doing like the due diligence analysis, you get a feel for who the borrowers are, and you start to speculate about their life story, and it really drives home that there are people behind this, right? And that's the part that makes it really interesting, because you're just like, sometimes, even in my brief time looking at tapes and just kind of doing some initial checking, I'm like, why is this person not paying the loan? The penalty fees that they've been racking up, they could have had this paid off, and now they're almost back to where they started, and you just kind of wonder what happens. And a lot of times they don't seem like bad people, so you're just kind of, it's interesting, right? And maybe you have some commentary on that, but I don't know what's going on there. So
yeah, I'll comment and then I kind of jump into kind of you getting started, some of the things that you found easy, hard, and what experience you've had. But it's a little bit, to me, it's a little bit like game theory, a little bit, because it's not only looking at spreadsheets, because it's like, okay, what should you buy this thing for? But you're dealing with a human on the other end that you would expect to potentially do one thing, but they don't. So, my kids play video games, and, I watch sometimes him playing, and, he's doing something, and then sometimes he'll do something that I'd be like, oh, I wouldn't have done that, or somebody else is doing it, they wouldn't have done that. And it's kind of similar in the note space, where you got to be very reactive to, what these borrowers do. So it's not is it's a little more interesting than, on a fix and flip or something like that. You're going to have headaches and problems, but this is more kind of a longer term, real world, back and forth type of situation.
yeah, exactly. But that's the part that makes it interesting. Like, I have one borrower right now who's just clearly abused the system. And it's a low dollar value loan, but I want to stick it out just because I want to see what happens. I want to understand. I mean, it's a learning experience, number one, so I'm new to it, but I'm just like, why? Why is this guy doing this? And I want to see how it turns out. And that's actually part of the motivation for me, which is kind of weird.
So to give people an idea, you started, really digesting notes. I think I sent you a bunch of information right around Thanksgiving, correct?
Yeah, it was right around Thanksgiving, and that actually ended up being pivotal, right? So I think, for people out here that are waiting to pull the trigger on this or do it, what actually ended up working out really well for me is Thanksgiving. And we have a Christmas shutdown at my company around Christmas for like 10 days or whatever. And so what I did on my days off is like, I'm going to treat this like work. I'm going to go in, and to get a decent start, I'm just going to try to block out as if I'm going to work that week, and try to learn as much as I can interacting with you. And, I kept also, like, for the first couple of months, I kept a diary and an Excel sheet, and I just tried to do like one thing every day to, like, because when you actually write it out, and you're like, okay, I'm making progress, right? So you kind of play these mental games. And so those were the two things. I kept a diary, and then I, I treated it, I utilized some vacation time to get off to a faster start. And having you kind of block things out for me, like in chunks, and then just, so not trying to like learn everything at once. Like, I think initially you provided me with your due diligence sheet and kind of like your initial calculations. So I kind of took that apart and made sure I understood the underlying, math and what was being calculated. And after that, I started looking at the due diligence process, right? And you also recommended books, so I banged out a few books during that time to just, but for me, and I think we've had this discussion before, that we're both learn by doing people. And I felt like the books were good for like the philosophy, and it's more about the philosophy of how you approach it. But in terms of actually being able to execute something, I don't think they really lend themselves to that. Or at least I haven't seen a book yet that makes me feel like I can go out and do it. So maybe you should write a book that does that, right?
That would be more of a college textbook type of book, probably would be what it would need to be. So, when you look at, 6 months, and I think you were in like 90 or 120 days when you pulled the trigger, which I would say is pretty quick to pull a trigger. I know, I took about 6-8 months. Most people you'll talk to take about 6 to 12 months, which is, I'd say on average that it is going to take for people. When you were doing your initial studies and stuff, I just want, I'll pick a few topics like due diligence of looking at the collateral and so forth, and, following the checklist. I know servicing comments, you enjoyed those, reading those because those are like stories. But it's one thing I just want to mention people to make sure you get those because they're important to understand kind of the frame, the story of this borrower. But as part of the overall due diligence process of looking at like a title report or ordering some of these reports and stuff, was there one thing that you thought was, well, this was interesting, or this is more difficult, or this was simpler than I thought, just out of, that curiosity? Or is it, kind of, okay, let me understand this process. And once you get it down, it's kind of just follow the same process and operations and kind of things work themselves out. I'm curious your opinion.
Well, all right, I'll put it to you this way in a very succinct manner. I don't think, no, I know I wouldn't have done this had I not known you for so long. Mm-hmm. So two things, I wouldn't have done this without a mentor, and I wouldn't have felt comfortable picking some, random person claiming to be a mastermind on the internet, right? Yeah. Actually, the term mastermind is a huge turn off for me. But like having known you, and I'm like, all right, Sev knows about this, I can trust him. And then having you as a mentor, like that's one thing. I think one thing that really helped, two things that really helped me in this process is having kind of a mental framework going into it was that, I have 20 years of experience at my job, but I still have mentors, right, that are trying to help me grow. And so what I've learned that, in the engineering world, particularly in the defense space, which is this weird kind of ecosystem, is that a proper mentor can just cut years and months of learning things the hard way, or at least minimize the hard lessons, right? Yeah. So I knew kind of going into it, I'm like, okay, if I can have Sev help me with this, that is, be a mentor and just kind of guide me through the wickets. And then the other thing that really helped, because, it was a fire hose of information and you were blocking things out really nicely. I remember having that conversation with you and I was like, how do I think about this and just comprehend this and have like a mental framework? And this is something I'd love for you to expand on to the people, but, we're both project managers, and you just told me, Jeff, think of each note as a separate project at work. And that was like the aha moment. And I think if you could expand on that whole thought process for the audience, that was like everything for me, because once you blocked that out and I could take the pieces of information and that you were giving me and put them in kind of a linear process, right? So
yeah. So one thing I've noticed in this space, or I've recognized, is people who have project management experience tend to get things, get more traction faster. And I think it's because a lot of them understand like what critical path method is and things along those lines of, hey, what's the thing that's stopping you from moving next steps? Because if you have 5 tasks, 4 of them you need to get done, but one of them is holding up, multiple tasks down the road type thing. And like you mentioned, each one is its own, it's like its own little separate company, its own little separate project that, you just focus on that task or getting what's the next step on that one done. And then kind of, the space is really a waiting game. It's like you get a task and then you're waiting on something else. So you go to the next one, get a task, wait on something else. A lot of people ask me a lot, like, how do you get so much, done or manage so much? And I was talking to somebody the other day and I said, I'm not smarter than anybody else. I said, I just know how to juggle really well. I'll have 100 balls up in the air. I just know which ones are the ones closest to the ground that I need to pick up on and toss that one back up to keep it going, keep everything going. But back to your component or question or comment about the project management, I think that's important for people to understand is, you look at the end game of, okay, what's your end game? Where do you want to go, on this loan? And, most people want to try to get it worked out. Okay, what are the steps? And just think about what are the steps that need to happen, and also understand, and I'd like to get your opinion on this too, to relate to this, is this isn't like, everyone today is in this digital world, thinks everything happens at the snap of a finger. And like, oh, I sent an email at 11, they haven't responded by 2. Well, if they haven't responded in 2 days, sometimes that occurs. And I think people also need to understand that things don't happen instantaneously, but also as a manager, your responsibility is to manage the people you pay. So you need to manage your servicer to make sure, hey, if you sent them something, they didn't respond, follow up with it, or an attorney or a title company, because again, sometimes things just get lost in the shuffle. So I'd like to get, if you feel the same way on that.
Oh no, I do. And as you're going through those things, I was like, there are so many aspects of what you were just talking about that could be like each one of them their own podcast, right?
Yeah.
And because like as I talk to you, I'm constantly mapping back to what I'm doing at work, which has kind of evolved over the years, right? So if each node is a project, right? And if I think of that as like a program at work, there's also like the shaping phase, the capture phase, the setup, the closeout phase, right? So another topic of discussion I actually haven't had a chance to talk to you maybe a little bit is the shaping phase would be like, how do you cultivate business relationships, particularly as a small note investor, right? Like I can't go to a hedge fund and be like, hey, I have 2 notes, let me cherry pick from your billion-dollar portfolio, like, so I don't know like how to scale, right? So that's something, I definitely want to learn. And then you go to the management phase. And one thing that really helped me was when you gave me your due diligence sheet. It's like, okay, you have the initial kind of what's the information I have on the property, what's the bid phase, negotiation, due diligence is in there. And I view each of those like gates. It's like, okay, I have this information, I've satisfied this gate. What information am I trying to get here? What's the next gate? And so the way I block out the process is exactly the way I do it at work. Is before I panic and try to understand everything, I just ask myself, what are the critical gates, right? And then what's the information I need at the decision point? And one thing that kind of really struck me about this, and because I work in R&D, is it's been beaten into me over the years that one person cannot know everything. And so I'm very comfortable with not knowing things and sounding dumb, but going to the expert and being like, hey, this is a dumb question, I know it, but just help me with this, right? Speak slowly, use small words, explain it to me and help me over this hump, right? And I'm just wondering how many times that you see people that they read about this, they try to learn everything, but they don't start because they're afraid of, they think they have to know everything, or they don't know how much they need to know before they can start. And I think that for me would be the biggest stressor if I wasn't used to a certain degree of ambiguity from, my main job, right?
Yeah, that's a great point, because typically, we call it analysis paralysis, in this business and in many businesses, where people just won't buy because they always think they need to know a little bit more. And then on the other spectrum, you have some people who learn about this on a website, and next thing you know, 2 weeks later, they're out there trying to buy a note. And it's like, oh boy, but it's that happy medium. And you kind of hit a great nail on head. You don't need to know it all. And for example, my background again is in, real estate development, construction management. I don't know, when we're going to develop a project or get it permitted, I know the process, but there's certain things I don't know everything. But the key is I know who to go to get that information, or ask the question to explain it to me. Just like when we're building a building, I'm not, for my background, structural engineering, I know a lot of the pieces and parts and components and what to look for. But like once it gets to like certain components like electrical, I'm an idiot. I can tell people I know nothing on electrical, but I know who to go to ask the question. And that's kind of like note investing. It's the same thing. Is you're not going to know everything. Like you're going to get a title report back, and there's going to be some really crazy stuff on there. It's like, okay, I don't know this, but okay, who do I go to? Do I go to a title company, or do I go to my attorney? From that perspective. Or there was, something potentially with the note or the mortgage. 99% of the stuff in this business, though, usually just gets resolved. For me, if you don't know, it's you send to the attorney, because they're the ones who will either give you the answer or kind of point you in the right direction of somebody else who might be able to tell you, because they've probably been down that road, or again, talk to another investor. But that's kind of one of the things I just wanted to mention about that. But I really like your comments about the gates, because that's a great analogy of, each phase. And as you phase this from, okay, putting in a bid, and then, getting it accepted. And the next gate is, getting the collateral file from them and doing your due diligence. And then next gate is, okay, we're done. Now we got to close. And then, all of that stuff gets talked about, but the first time you went through it, I'm curious to your opinion, because people talk about it, but there is a pretty significant learning curve just, doing a loan sale agreement and boarding a loan. Wouldn't you agree?
Oh, no, for sure. And a lot of that too is like built around language and etiquette, right? And
Yeah.
that's where having a mentor comes in. Perfect example. I have 6 loans and all 6 of them have the demand letters going out.
Yep.
Well, how do I contact the attorney to give them the information and organize that email instead of going back and forth with him 5 times and he's going to charge me for that time? So instead I cut that whole loop out. I'm like, all right, Seb, how do you do it? Right? Just help me out here. So it's kind of like this balance of, taking the initiative to learn on your own so that then when you go and ask for people's time, it's a whole dance, right? Like when I go and ask you a question, you don't want to feel like you're doing everything for me. You want to know I put in a certain amount of work.
Yep.
But then I know if I go to you with a pointed question, you can cut out a lot of pain for me, right?
Mm-hmm.
Because my feeling is, and like in the again, I kind of reference my own experience as a project manager. In the microelectronics world, it takes me 6 months or more a lot of times to know if I made a mistake. And then I have to have a recovery plan. And then when it blows up in my face, it's good to know, I'm like, do other people have this happen? How much should I freak out? I just told the equivalent of a Mercedes. Is that normal within my industry, right? And so having somebody to go to that's been to the rodeo a few times, and I think we've talked to this before, is I think a lot of this too up front is about risk and opportunity management, right?
Absolutely.
And having somebody that can help you manage that risk, because you're going to make mistakes, right? And maybe you can comment on that, but you helped me a lot with that in the beginning and how to block it out and frame it and like bid. Like another perfect example is I was looking at this property at Paper Stack, and I'm like, what's wrong with this property? And you pointed out to me the velocity of money is really low here, and it's going to take you forever to pay it off. And it's like, wow, I should have seen that up front, given, and I just missed it, right? And now every time I look for a loan, I look for that, right?
Yeah, somebody made the analogy of, think of skydiving for the first time. And you're going to go with somebody who's done it a few times, to say the least, and you're going to be basically, you're going to be strapped to them. That's kind of the analogy of, buying sometimes your first note, if you have a mentor, is that skydiving experience. It's a thrill ride because you're going to be scared, out of your mind when you buy your first note, because it's something you've never done and you're spending money that you're like, oh, I'm putting this at risk. But in the same token, you're also like, okay, I'm doing this with somebody who's done this so many times. To them, it's just like, it's like making macaroni and cheese. They've, that's, done it a million times, and, it's going to be fine type situation. From that perspective. And you've done your path has been a little different because you did just jump into, and you wanted to really learn by doing, and you bought non-performing assets right out of the gate. Some people may start with a performing asset to try and take, the slow roll it, but I know you're like, nope, I'm going non-performing, but you're still getting that fire hose of information right now, dealing with attorneys, getting the demand letters out, dealing with the servicer, getting the information from them. So I'm sure you're just like a sponge right now, absorbing a lot of this information.
Yeah, so it's funny. There's actually one specific incident in my life that informed me that just framed my thought of why I approach it that way. So when I first started at my job, it was like total imposter syndrome, right?
Yeah.
I'm sitting at lunch one day with 3 guys, and the guy across from me, just a genius circuit designer, was explaining something. And I was just sitting there, I'm like, oh my God, I'm gonna get fired from my job. I have no idea what this guy's talking about. The guy next to me, who I thought was a genius, right, is just smiling and nodding. I'm like, oh my God, this guy gets it. So the first person gets done his explanation, and I'm sitting there, and the guy next to me goes, okay, explain that again, use smaller words, and treat me like I'm an idiot, right? And he started laughing, and so I'm like, wow, this guy that I thought was a genius felt totally comfortable going to an expert and just be like, look, dumb this down to me so I can get it and we can move on, right? And this same person also told me that once, because he was a project manager, he's like, you can always get more money, but you can't get more time. And he was not talking about being stupid or taking dumb risks, but he's like, and so that always stuck with me. And by the way, this guy is, at my age, is a vice president of $1 billion section of our organization now, right? And he'll probably be CEO, so I figure he knows something. So the way I approach notes is, I'm going to buy one relatively large note for me, and then just a bunch of really small notes. Like I think the other 5 balances were like 5,000. Actually, I have it right here. Let's see, 7,500, 5,700, 4,700, 8,700, 7,500, right? Yep. So, and they're all non-performing. And on 2 of them, on one of them, I paid $6,000 in back taxes. And on another one, I paid $5,000 in back taxes to stop foreclosure on both of them. And the reason why I did that is I can spend 3 years doing performing notes and taking no risk, but eventually when I go do non-performing, I'm going to take this learning anyways. So my thought process, going back to risk and opportunity, is I figure on each of these notes, the worst case scenario is that it'll cost me the same as multiple college classes if I make a mistake. Yeah. And I will have learned more here than in a college class, because I'm a learn by doing person. I don't retain anything unless I'm doing something. Right. So I don't know if that resonates with you or.
No, it absolutely does, because I'm the same way. Now, granted, for me, when I started doing notes, I was also getting a grad degree, and I spent, I don't know, 35, 40 grand at Georgetown getting a degree, but I was also doing that more for, my other life that I have in my job, because I wanted to develop some additional skills. But a lot of classes I took were very relevant to note investing. But you hit a nail on the head that you hear a lot of people talk about, and you see this on websites like Facebook or Bigger Pockets, where you'll see these people who have these $20,000 training programs where you spend a weekend with them, or, whatever it may be. And then after the weekend, you're done and you just dropped all that money, and you could go buy a note for that price or less and learn so much more. And that's one thing I tell a lot of people, because of the simple fact that there's only so much you can learn in a weekend. And if you're trying to get a basis of what you're learning that weekend, half the stuff that you're being told, you're going to retain certain things. But the stuff you retain might not even be the important stuff that you should have retained, because you haven't bought, a lot of these people haven't bought a note yet, so they don't really know. For me, I look at, if you wanted to kind of get a mentor, either be in the step of ready to buy a note or have bought a note, and then, kind of have somebody assist you with it, again, just to make sure you're not making some crazy mistake. And then kind of, like you said, learn by doing.
Could you like, so it's interesting, right? My brief exposure to this, I'm seeing that the note space is pretty aggressive. So, people that are trying to capture mentees or whatever, they're fairly aggressive. Could you like outline what you think a good mentor is? Because some of these people, it kind of looks to me almost like a Ponzi scheme, where they're just getting people to buy their notes, or like, I don't know. I just get the vibe that it's not really driving people towards independence. And I was kind of like wondering what you feel like a good mentor or mentee, like what are the things that people should look out for, right?
Well, the first thing if I was looking for a mentor, the first thing I would want to understand is, how are they going to assist me? But in the same token, being upfront with me, because, for example, your situation, Jeff, compared to the person next door to me, they may have, 10 times more money than you, or a tenth the money you have. What I see a lot of people doing is they have like $5,000 or $10,000 to get in this business, and they're thinking, okay, I'm going to be full-time in this thing in 2 years. And the reality of it is, the chances of that being successful are highly unlikely, and people aren't being told that. So one is, people got to be upfront and tell the truth to people. But for a mentor, a lot of the stuff that's being taught is, okay, let's get on a webinar once a week or whatever the case may be, and we'll go through certain things or some type of aspect, which that is good to get an overall basis on certain things. But where I think the true benefit of a mentor is somebody there when you need it. So, for example, let's say I was mentoring you, and I did 3 months ago a class on, or we did a session on sending demand letters. Now, you would remember, okay, yeah, we kind of went through that, but you were just sending demand letters last week. How much would you have retained from that 3 months ago on what that was doing? Or if a mentor was basically like, hey, available, where you said, hey, Chris, I'm at this step or phase. Can we get a 30-minute call to go through this and make sure I understand what I'm doing? That's kind of, and that's kind of, I mentor some people and so forth. And that's kind of how I've shaped it, is on an as needed basis, and to go through and answer the people's questions, because your education and background is going to be very, very different being an engineer like me than somebody who was just somebody in marketing, because somebody in marketing has other strengths and weaknesses, and you have other strengths and weaknesses, and they don't align. So it's also understanding that. And if you just have the same program for everybody, it's going to work for certain people and not others.
Yeah, but but I will say that for sure, one thing that really helped me was, when you provided the basic blocked out, like, due diligence process, deal flow, right, and calculations, because that helped. I could put it within my framework, because really, whenever I think of projects at work or here, is I want to get to the state where I simplify other things as much as possible, so that when we hit the complicated things, I can focus on it, right? Like, I want to be brainless for as much as possible, because there are things you absolutely need to focus your attention on, and then you can just focus on those things, like going back to the demand letter, right? So for instance, specific example, I needed help with, I'm like, all right, how do I format this, right? And then I had a bunch being set up at one time, and then one just fell through the cracks for like a month. So now I'm a month behind. I'm like, and I went to you, and there were like etiquette things too, like how often should I follow up with the attorney and ask about this, right? Like, and things of that nature. And, and so it's what's the etiquette within the industry, right? And like, not only how do you do things, but what's the etiquette? And one of the things, I haven't actually talked to you this much about it, but I've always wondered, and I think a mentor can help here too, is just how small is the industry, and how much does the etiquette matter in terms of interacting with people? Because, like, I know in the defense industry, in the area I work in, everybody knows everybody, and they're there for like 30 years at a time. And if you upset them, that's going to be an immovable object for you for quite a long time. And I'm just wondering if any of that is the case in the notes industry and things of that nature.
Very, very similar. This space, you'll see a lot of people come and go, because the space, people sometimes will sell it as being passive. It's anything but that. And people realize after trying to do this for a year or two, they're spinning their wheels, spending a lot of hours to make a little bit of money, because it's not an easy business to scale. And it really only works if you can get it to that scale point. But to your other point about, yes, it's similar to defense industry, where it's very small, it's word of mouth. And yes, there's a lot of etiquette where you want to make sure, you're professional with people, at all times, but also it's similar to the wild, wild west in some instances, because what's happened with this space is, to be honest, the governments in the states never envisioned banks to sell their debt to, somebody like you or I, or to make its way down to you or I. So they've never really caught up, and it's such a small space. As you know, the government doesn't have the resources to really, to put anything in place. So that's where there's the etiquette, but you also have to be very careful, because there's a lot of bad actors in the space as well.
Yeah.
But so talking a little bit about your notes and so forth, and you mentioned kind of demand letters and stuff go out. Correct me if I'm wrong, but you've kind of mixed it up and invested in a few different states. You mentioned they were, somewhat on a low balance component to it from that perspective. What is that? What's that?
Well, for me, with the exception of Tennessee, which was about 18, the balance of that loan was 30,000. I think the total legal balance is 50K or something. So I have one note that, at least for me, is relatively large.
Yep. Which, that's probably, I'd say, like an average size loan,
Yeah.
UPBs of 30 to 50 from that perspective. What has been your biggest kind of like aha moment so far in your 6 months of like, wow, like either and it can be something that is you thought was like a lot more difficult, something a lot more easier, could be just something something you thought something in your head, this is how it would be, and it was just completely opposite of what you thought it was.
Well, from the non-technical perspective, just how interesting each note is, right? That was the biggest aha thing, because when I first started, like, one thing I've focused really heavily on before I set up my complete file structure and organizational structure, like once you gave me the heads up that it was really each note was a project, then it's like, okay, I need a framework to deal with all this, right? And then once I got past that, which, honestly, if I hadn't worked with you, all right, so the biggest surprise is I was able to start in 90 days, but we've talked about this before. If I'd done it alone, it would probably take me a year before I was comfortable, because I would want to get to the point of comfortable ambiguity, kind of is the way I think of it, right? It just would have taken forever. And then it was, all right, I need to create the structure. But at this point, I didn't really have a feeling of whether or not I would like it, but it was only when I really got into the story behind each loan. That was when, so what was the biggest surprise and aha moment was just how interesting this could be. And because if you're not interested in something, you're not going to do it. Right. But from, a technical perspective, I would, what kind of floored me, I think another surprising thing was Pennsylvania. It was a little bit off the wall. You have like city tax, neighborhood tax, county tax, like it's just crazy. And then like you go to find out, like, okay, well, how much do I owe you? And they're like, no, you have to pay us to find out how much you owe us. Was another thing. They have like a third-party tax service, and it's amazing to me, like the disparity in some states and counties of how easy or how hard it is to get information. And so that was surprising on how like non-uniform it is, right? And then the other big aha moment was judicial states versus non-judicial, and the different rules they have regarding foreclosure and eviction, even in normal times, right? So I don't know. There's a lot to unpack there, I'm sure.
No, I think the biggest thing you mentioned is two components. One is, people, and I think you've mentioned this too, you have some loans where people haven't paid in like 5 years, and it's like, how could somebody go that long? How could the bank or the prior lender go that long is sometimes what blows people's mind. And then the third is the lack of uniformity. And I kind of chuckle, because I know you understand blockchain technology and stuff. And when they talk about getting real estate, title and deed and so forth on the blockchain, I always laugh, because I'm like, you're telling me you're going to get this podunk county up in the middle of nowhere who still does paper copies of everything, and you can't even e-record a document to work on some type of blockchain technology. I'm like, they're probably still using AOL dial-up for their internet service provider. I would see struggles with that. But I know you also, certain things like you use Simplify, and you're like, wow, this is awesome and easy. So that's something I would think you've seen from some aspects of this business is being very simplified.
Well, the whole thing about Simplify, right, is I wouldn't have known about it unless I was talking to you. And then once I did it, I'm like, just knowing about this and having, again, it goes back to a mentor being able to cut down your learning curve, or making some things a lot easier so you can focus on things that are more important and more complicated. And that saved me hours and hours, right, of trying to figure out how to do that. And quite
Mhm.
frankly, dollars trying to have somebody else do it. Right. And it's
Yeah.
just a drag and drop website,
Yeah. Mhm.
or like, I know you're big on data tree too. Like data tree is just such an amazing, software package. Right. And so it's
Mhm.
having somebody help you connect the dots is
Mhm.
just such a huge deal. And
Mhm.
going back to the borrowers and the people that haven't paid for years and years, the thing that's really fascinating about that to me is, so the $30,000 loan with the 50K balance they haven't paid for years and years, is I don't get the sense that that person is a bad person. I think that it might be an education issue where
Mhm.
the note holder died and they had the deed, so I think maybe they just don't think they have to pay it, or nobody's going to notice. But I don't get the sense that they're a bad person, or like, if I could get in touch with them, I'd work with them, no problem.
Mhm.
What irritates me is the $5,700 loan I have. The
Mhm.
guy owns 10 properties, literally,
Yeah.
has like an IRS lien.
Mhm.
And we contact him. He's like, well, I already paid $22,000 in this loan. I don't need to pay. And and for whatever reason, that just drives me up the wall. But I also find it kind of rewarding. Like, you know what? Even if this isn't highly profitable for me, I'm going to drive this to its conclusion, because they shouldn't be gaming the system.
Yeah.
So I don't know if that's a healthy attitude or not, but I'm just very surprised that
Mhm.
people make things much more difficult for themselves than they have to be. And kind of an, an joining thing to that is, I always thought of lenders as kind of like, not evil, but people that don't care.
Yeah.
And what's flipped this around on its head is like, wow, if I'm ever in trouble, the first thing I'm going to do is reach out to my lender right away, like zero time, because it's not in their, like, it's flipped the whole perception on its head. You know what I mean? Because it just, yeah, I think a lot of my views of lenders were very ill-informed. I'll
Well,
put it that way.
it's human nature, and it's unfortunate. I actually had a call with somebody today who called me after they ghosted me, and they're actually doing some stuff for me, and they ghosted me and kind of left me hanging. And they called me today to apologize. And we've all probably been there at some point in our lives where we've kind of ran from something, and that's kind of what happens with a lot of these borrowers, because also when sometimes they're dealing with these big lenders, they can't get through to anybody or get to some conclusion, so they basically give up, and then they don't realize, and and I don't know why they would, because I didn't even know this existed till 5 years ago, that people could buy this, that hey, your lender's actually like a human who puts their socks on the same way as you and doesn't have to go through 30 different people of red tape to work these things out. But you're right too in that sense with borrowers, and understanding your borrowers, because I'm dealing with two right now that both of them didn't think, because they filed Chapter 7 bankruptcy, which wipes your debt. They're like, okay, I don't have to pay this anymore. And it's like, you're right, you don't. But if you want to keep your house because you owed money on it, we got to work something out. And they're like, oh, I didn't know that. I thought I got a free house. And it's like, well, unfortunately, no. And we've worked out new modifications with both of those borrowers. Actually, one of them signed last week, and the other one, my attorney just sent me some documents this morning. From that perspective. So yeah, it's really interesting, the borrower, perspective, and understanding where they're going from there. So
Yeah, so I'm looking at the list of the small dollar loans on them.
yeah.
So I'll give you a rundown of what I've learned so far. I think you'll find
Okay.
this humorous. So
That's really
again,
interesting.
$7,300, $5,700, 47, 87, 7,500, right?
Yeah.
So in the first one, the top one, the $7,500 one, both the borrowers are dead. Have no idea. People are living in the house. We have no idea who they are,
Yep.
right? So needless to say, we can't contact the borrowers. So the demand letter went out on that. We'll see
Yep.
how that turns out. So that'll be interesting to find out how you deal with dead people.
I've had a dead borrower show up in court, by the way.
Oh, you did? Nice. Excellent. Well, I have, so on the title report, they actually pulled, on the title report was awesome. They actually pulled pictures of the tombstones. So I'm going to say that's fairly accurate in that case. So that was a surprise. So learned something new there, that they'll do that in the title report.
Yeah.
The second borrower is the guy that owns 10 properties. has the IRS lien, and just doesn't want to pay. He also has a nice YouTube channel that's kind of interesting to watch. So he's kind of there's a slight douche factor with the guy, so I probably shouldn't say that. That's a technical term, I think, in real estate and lending, right? So the third loan, so this has been just an awesome social experiment. The third loan, yeah, I don't know what's going on. There's been zero contact. We don't even know if anybody's living in the house right now. I gotta have them go check to see if the house is vacant. The fourth loan.
Step back. You checked that house before you bought the loan, though.
Yeah, it said, so per your recommendation, I believe we used two, safeguard and inspection. So I think one listed as occupied, one listed as vacant, and we tried to reach out and we haven't gotten any response. So this one's kind of dry. There isn't too much going on there. The fourth loan's really interesting. So the person with the city has just been getting like judgment after judgment after judgment of unpaid water bills. So that was going to go into foreclosure. So on an $8,700 loan, I paid $6,000 in taxes to stop the foreclosure on the water bills. And then they've been getting fined. This is in Cincinnati, Ohio, and then they've been getting fined for the tall grass. So every time the neighbors complain, it's another $250. And then when it goes into collection, it doubles to $500. Nice. Right. So they got about they got 2 in collections and another 4 things. So I just stopped the foreclosure. Right. But then here's the interesting thing. So the government, although they have the new address of the guy, which is in, I believe, Arizona. Okay. Right. But because he put the address in the wrong column, they don't send any of the notices to his address, which they have. They just send it to the house. So it's just being mailed over and over again. They know it, but they won't do anything about it. Nice. And then we tried contacting him and we ran a skip trace, and it aligns with what he says his address is in Arizona. So it got returned to sender. So then I did a maps and I brought the address, and the address he listed looks like it's a resort address. Okay. So then to stop the bleeding, as you know, because I asked your opinion on this and you helped me set it up, we went to secure the property. So you might want to stop and comment here on how you can secure a property before you foreclose. So I wanted pictures of the inside, and they get back to me with the additional information. They're like, yeah, we couldn't really go inside the house because it's a hoarder's house. So you'll have to pay us money to clear out enough garbage to go in the house and take pictures. But the house is in a nice neighborhood, so maybe we'd want to stop here and you can chime in on securing a property. Well, yeah. So if typically the mortgage, or deed of trust will, if a property is vacated, you can post a 7-day notice or notice on the door, or if it's been confirmed vacant, like powers off or so forth. You have most mortgage, you have the right to protect your asset. So if that's the case, then you can have a preservation company, you line up and say, hey, we're the lender on this. The property's been vacated. It's not an REO. You want to kind of stipulate that you don't own it. You're the lender. And then they will go out and change the locks for you if they need to be changed. And then, typically they'll do an interior inspection where they go through the house. The challenge a lot of times with those, just being frank, is they'll take like 1,500 photos, but they're like a photo of like an up close, like there'll be a crack or a water stain on the wall, and they'll take a picture of that water stain, but they don't take a picture of like your entire room. Most of us would like to be like, okay, we've never seen this house. We'd like to kind of like the realtor perspective of, here's the family room, here's the living room, what's the rooms look like? And they usually don't do that. And it's frustrating because what they'll do is they'll show like the cracked door or the leak in the ceiling. And it's like, this is great, but I don't even know what that inside of the house kind of looks like from a deeper perspective. But that's I just wanted to throw that 2 cents in. But yeah, it's something that I think a lot of people don't do, that they have the right to do, that they should look more into. Well, remember the larger loan I have, the one in Memphis? Yeah. Remember how you were helping me get the street photos of that? Yeah. And we sent them down there, and they took a picture. It's a long ranch house on the corner. It's a corner lot. They just took a picture of the end of the house, and they didn't drive around the corner and take a picture of the front. So then you sent them back, and then they did the same thing again. It took like, I think 3 times to get them to take a picture
Yeah.
of the front of the house. It's like UFO photos. It's like, come on, you can't
Yeah.
take a clear shot of what I'm looking at.
It's a joke like you see on like the bank footage, the bank robber with the like fuzzy, 120 pixels or whatnot. Meanwhile, you could see a picture from like a U.S. embassy that's got a camera on it that can read somebody's watch from 3 miles away, and it's like, okay, we could see pictures of Mars, crystal clear, but you can't see. It's almost like that theory. But no, in that, when I kept sending them back, because in the email, I made reference and told them, this is a corner lot. Take photos of all sides, and that's something I recommend people do. If it's a corner lot, tell them, hey, look, I want inspection. I want photos from 2 sides of the property. And then when they don't, you can say, I asked you for it, you didn't do it. And then a lot of times they won't charge you to go back.
Yeah, this property in particular was particularly unfortunate for my home life, because there was a gutter hanging from the side of the house, and I thought it was roof damage. So Seb had a one-line response, is, Jeff, it's a gutter hanging from the roof, or something to that effect. So every time I said something stupid around the house, for like the next week, my wife would be like, Jeff, it's a gutter. It would be her response, letting me know I said something stupid.
Well, that was your stupidity for telling her. So
yeah. Yep, exactly. So it was dumb on a couple fronts. So yeah, I'm really interested to see how that property with the hoarder works out, because as part of the securing process now, they went in, they mowed the lawn, they secured the back door, and the neighborhood's actually really nice. So I'm just curious as to how that's all going to go down, and additionally thinking about, well, should I pay the fines? Because if I'm the one, so here's another thing that I'd like to ask. If I'm the one who's initiating foreclosure, so I stop foreclosure from the unpaid water bills, right?
Yep.
But they owe probably like another $1,500 to $2,000 in citations. But the interesting thing is that the citations I can actually negotiate down, which the lady was nice enough to tell me. Is that something that's common, and do you do that a lot?
It's very common that certain jurisdictions will negotiate them. Typically, what they'll do is negotiate the late fees or penalties. If you call up and say, hey, I'm just a small lender, I'm not, this large institutional bank, that we're lending on this property, if there's a way you could help me and so forth, we'll get, the regular balance paid, but can you waive the late fees and stuff? But so here's the predicament that you're running into is, this property has equity. The assumption is there's equity in it. So do you want to just wait till you foreclose and have them, if it gets sold at auction, get paid off then? Or, pay them off now and then let you based on your mortgage and note, you could probably collect the interest on paying those for your protection. So if it's, an 8% or 9% note, you might be able to say, hey, if I can collect the interest on this, hey, collecting 8% isn't a bad thing. If the note's at like 2%, why would I pay this and only get 2% on it? I can put my money to use elsewhere. Those are things like, people need to evaluate.
So actually, that's a really interesting point, right? And this is a good example of pairing up with somebody knowledgeable would come in, because I didn't even think of that, right? I was thinking more along the lines of, okay, if I'm the note holder and I'm the one who initiates the foreclosure process, right? Then I think that I was just thinking, well, when I set the initial bid price, right?
Yeah.
So I would set the initial bid price of what they owe in fines plus what they owe me if I haven't paid off the city, right? But I hadn't even considered the fact that I could be earning money at the note rate based on just paying off their bills with the city. That never even dawned on me until just now.
Yep. Yeah. I mean, I always recommend you got to read the note, make sure A, it's something that's recoverable, but B, also that's something that's interest. But, contract for deeds typically get hairy, which we won't go down that road, but typically on notes and mortgages, it's allowable. So it's something that, could be collected.
Right. So on the last small loan, again, like taking this as there are people behind it. Actually, I have to secure this property. I've just been so busy with work, I haven't gotten around to it. This situation's different, and this is one where, so the owner of the property, I think, is literally like 88 or 90 years old, and he's living around the corner in a retirement community. So, hopefully he'll reach out. We're trying to reach out to him. The property is vacant. I have a feeling he's just kind of in that phase of life, so again, this is a nice area. So hopefully we can get in touch with him or somebody in his immediate family and work something out. The larger loan is the loan that I lost a month on because it fell through the cracks with the attorney, which is kind of a little bit, it's not like a huge deal in terms of, first world issue, right? But it's in Tennessee. So the foreclosure time in Tennessee is really fast, isn't it? Yeah. So conceivably, when I'm sending out the demand letter now, I could have been starting the foreclosure process, I guess, is kind of my thought. So, so yeah, I don't know. So again, this kind of goes into cycles of learning, right? Yep. I think if you dollarized, if you charged the amount of time I put into this against the note, am I making a huge profit? No, but I would rather do this now and take a lot of pain on a few number of notes and maybe get into a car accident on a small note than, wait 5 years. Because here's like probably the last thing that was on my mind before is like, what's your opinion? And I don't think I've ever asked you on this is, do you think that if I started out with just performing notes and did that for a couple of years before starting the non-performing, do you think that would cut down on the number of mistakes? Or is it like your first year of driving where, you venture into non-performing notes, you're going to make the same mistakes anyways. There's no advantage in waiting till later to make the mistakes, or do you feel that there's a trade-off there?
Certain things you'd avoid in certain things. So one of the benefits with buying a performing loan is understanding the players in the process. So understanding the boarding process, understanding the loan sale agreement, some of that aspect, and understanding, for example, your taxes at the end of the year, as you got payments coming in. That stuff is, now, can you make major mistakes? No, but you can learn a lot. The non-performing realm, is, it's conflict oriented. So performing typically isn't. So it's a different battle. Like you said, it's kind of like when you start out driving, hey, I'm going to drive on the single lane roads and so forth and so on. And, it's pretty generic and basic. And then non-performing is all of a sudden, hey, I'm going to go to drive in Europe on the left-hand side of the road in a major city. That's kind of a big nut. Or somebody who's, I grew up in Western Massachusetts where we had like 2 streetlights. First time I was in Boston, I was like, whoa, different animal. That's kind of analogy from performing to non-performing. So I don't think you'll still make probably some of the same mistakes, but it's really, it's specific to the individual. Certain people are much less risk averse and they're better off starting with performing. And some people who, aren't as risk averse can start with the non-performing stuff. Right.
No, I mean, it's just been very fascinating. And, it's just, I think the main concern for me is my work goes in waves, like working on proposals. So it's just a matter of keeping it. Like, I think if you just kind of, like you were making the point earlier, you just stay up on it a little bit every day. It's kind of like the vineyard analogy, right? I'm planting now, I got to harvest later, bottle, and then wait, right? And then, it's actually to the point where I need to start thinking about buying. Once I get all these demands out and the property's secured that need to be secured, and then I'll probably work on trying to board my next round of notes. I have to say, by the way, the paper stack interface is really, really good for what they're trying to do. So it seems like, I guess, would you recommend that as a place for somebody starting in notes if they're just looking to buy like 1 or 2 and see how it goes to start? Or
I do, because it also takes away, there's a lot of aspects in the buying and selling process that are very tedious. And if you're new, you're not going to know it. Paper stack basically gives you those steps and walks you through that process. So for somebody who doesn't have anybody to assist them and is going through this for the first time, paper stack is a great resource to understand and go through that process. Now, I'll be honest, challenge with paper stack is you may pay a little more premium for the note from that perspective. But when you look at certain things, like sometimes people get so caught up in returns. So let's look at this as an example. If you're spending $20,000 on a note, the difference between a 10% and 12% return are $2,000 to $2,400 a year. $400 is most likely not going to make or break your bank, from that perspective. And that education you get from it is probably going to pay more, is worth more than the $400 anyway. So that's kind of one of the trade-offs.
Do you think?
Go ahead.
Do you think people get hung up too much on interest rates? Like, because it really comes down to what you bid for the note price, right?
People get too hung up on their yields and returns. And somebody mentioned this. I think it was a guy, Bill McCafferty, who's up in Pennsylvania. You would enjoy Bill if you meet him. He basically says, and he's a guy married with a wife and stuff. He says, to other guys and stuff, he goes, how many guys' wives or significant others has come to him and said, do they say, how much money did you make? Or they say, what was your yield or return? If you tell them, oh yeah, I made 8% or 20%, they're like, okay, translate that into dollars, so it's from that perspective, it's at the end of the day, yes, it's nice to understand a metric is your yield, but how much did you actually make? Did you make this or that? So, and that's where I think sometimes people get so hung up on the numbers that it's like, hey, look, if I can buy a $10,000 note and at the end of the day in a year, I make, $2,500 on it. Okay. I made $2,500. Some people are like, that's not worth me getting out of bed. And other people, it may be. So that's where you kind of got to understand from that perspective, because, you can get the same yield, but how much work did you have to do? And is it worth you getting out of bed to make that number?
Yeah. Yep.
Well, Jeff, we're kind of running out of time. So I want to thank you for coming on this episode. I'll, put you on the spot with one last question, because probably towards the end of the year, I want to have you back on to see how these notes have panned out. If you fast forward to the end of this year, where would you like to be in your note investing journey? I mean, right now you got 5 or 6, what would you be your target, if you had one for the end of this year?
This first batch, I definitely either want to have reached exit or have the exit in sight, and hopefully, break even or better, particularly for the smaller loans, right? But I think I would have liked to have boarded at least 10 notes by the end of the year.
Okay.
Right.
Yep.
I don't know if that's a reasonable goal or how people typically, I mean, that would be one final question for you. How fast do people typically scale for them to actually do this successfully and not just peter out and be like, throw your hands up? Like, how fast do people typically scale? And that'll be my last question to you, I guess.
Yeah, it really depends, because some people could buy, 10 notes at $10,000 a piece, or one note at 100,000. So it's kind of and it really breaks down to how much money do you have to invest as well. But, I'll use myself as an example. I started buying in October of 16. I bought 4 notes. I probably spent, several months working those out. Then unfortunately my father passed away early 2017. So that, delayed a bunch of things. And then in 2017, I probably bought, I'd have to go back and check, maybe like 10 or 15 notes that year. Then 2018, I bought maybe 20, 30 notes. And 2019 is really when I exploded. Over 100 notes. So it was kind of the ramp up. So it's similar to anything. It's more, as long as you're consistently growing. So there's not really a magic number. Someone could go from 2 to 4 to 8 to 16, the power of doubling and so forth. But it's okay. Are you making progress? That's really, I think, what the important thing is. Don't look at the number of notes. But are you buying and making progress? That's really what I would say is for people, you can set that goal of 10. But if you get to 9, and then basically you bought, 3 notes that you bought, one in say July, one in September, one in November. Hey, that's a win, because you're constantly still buying. So.
Yeah, I guess my strategy, and we'll see how it works out at the end of the year, is just whatever I get from this, I'm just going to reinvest it back into this. Is kind of what I'm looking to do. So.
Yep, that's what I've been doing for several years now. So just continue to invest, continue to grow. So. Well, again, Jeff, thank you for coming on this episode of the Good Deeds Note Investing Podcast. As always, people, you can find us on your favorite listening station, and want to, again, thank you for listening, and go out and do some good deeds.